Dow is up 366. S&P better by 41. Let's bring in Doug Sandler. He's over at RiverFront Investment Group. He's the global strategist. And Craig Johnson is the senior technical research strategist at Piper Jaffray. And Craig, I would like to start with you because I'd love to know what your best trade was this week. How about that?
Well, Liz, our best trade this week was really Apple. I mean, here's a great stock that has been a relative outperformer in all this volatility, and it's been really the go-to place for a lot of the institutions that I talked to. They were taking profits in a lot of these other technology names that were really extended above their 40-week moving averages and repositioning into some of these names. So Apple was one of our better names, but it was a better relative trade, Liz, than an absolute.
Yeah, well, that's the thing. When you look at these moments and you think you're catching the bottom, there may be another day where we have a 600-point drop after the 1,000-point drop, which is exactly what we saw. So, Doug, how have you been advising everybody at your team on how to behave during this time?
Yeah, patience is the big thing. I think keeping the big picture in mind. At the end of the day, retail investors don't have a lot of advantages over institutions. And two of the greatest advantages are time horizon and generally a lack of leverage. And what that means is your hand isn't forced. So when you go through periods of volatility, which inevitably follow periods of low volatility, you can't squeeze volatility out forever. So you get surges in volatility, and it doesn't mean you have to do anything. So our biggest bit of advice is remember the big picture. The big picture is equities are cheap, bonds are expensive, and the appropriate catalysts are in front of equities. But this is a bull market that we think still has several months, if not years, ahead of it.
I'm glad you just said that. And Charles, Charlie Gasparino earlier in the program had shown that Merrill Lynch, Bank of America Merrill Lynch got concerned because they saw from the Lipper funds inflows and outflows that 2 weeks ago, $100 billion of money came into the market, into stock funds. Well, this week it looks like we've seen record outflows, $23.9 billion that came out, I guess, last week, right, from now until then. So that's the slower, dumber money, correct? Everybody needs to just take a breath here, do they not? And look at it long term?
And I got to tell you, I saw that coming. I talked about it on my show before this meltdown. You could see a deliberate shakeout of the so-called weak hands. I will say this, though, because everyone's saying the market's on sale. It is, but not every stock. When you were talking about Ford has been executing miserably. People, after watching this show, need to say to themselves, what stock do I own that just missed their corporate earnings and it was down anyway? Those are the ones you want to bite the bullet on so you have cash to buy the winners. We know the winners. They've already reported. They've already given us amazing guidance. Now we can get them cheaper. But the first move for a lot of people who are frozen out there thinking, hey, it's oversold. Sometimes if it's oversold because it's fundamentally driven, you've got to bite the bullet and put that money back to work.
Craig, your recommended equity piece here is at the lowest, I understand, that you've had in 10 years. What will trigger you to get back into this market with 1 minute left?
Yeah, 1 minute left. So, Liz, we reduced this recommended equity exposure from 95% to 85%, and we did this in about the 10th of January. There's so many charts were going parabolic. No question the fundamentals in the economy are doing great, but parabolic stocks like this tend to end one way. Not in a price correction, or sorry, not in a time correction, but in a price correction.
Sure.
And we still think there's more left to go before you ultimately shake this out. This market's been trading very, very technically, and this is just a bounce off of the 200-day moving average here today on the S&P. And until we get more evidence, it's just a relief rally.
Doug, give me your last 20 seconds. Advice for people watching as we go into the closing bell.
Yeah, advice would be this kind of volatility is expected and welcome. It gives a chance for it to shake some of those weak hands. Think about this as if you're growing grapes, you want to trim the vines regularly, and that makes a more sturdy plant. Bull markets need to have sturdy bases, and this is what we're doing right now.
Yep, just need a little air let out of a growing market, bubble, football, you name it. There we go. It was another whiplash day, but looks like we're moving to the upside by 311 points. Folks, that'll do it for quite the Claim and Countdown week.